Let's bring in Obermeyer's Ali Flynn Phillips and Crossmark Global Investments Victoria Fernandez. Phil Palumbo is still with us. On this conversation, Victoria, how do you feel about some of the big tech names and specifically the divergence that Mackenzie was talking about? Does it present opportunity for you?
Yeah, I think you definitely have to start looking at the tech space, not as just, one big group that you can just kind of pick any name in there and you're going to do well. There's definitely going to be some divergence between those names, as Mackenzie was talking about. You've got to look at those that you think will actually have a return on the investment from the CapEx component that they have. And I think you also have to start looking at maybe the second derivative of the AI play. What are those companies that are actually going to put it to use the best? Yeah. Those are the companies that I think you can look at investing as well. So tech will be a little bit trickier, although, Sarah, they are expected to be almost 50% of the EPS growth in 2026. So there's still a lot to be made there.
Yeah, I mean, that's, Phil, it gets to your point. So Amazon, you think it presents an opportunity here. And then on the second derivative, you mentioned Salesforce. What other sort of companies do you think will be AI beneficiaries?
Yeah, so on the second derivative, on the power play, Bloom Energy. Bloom Energy had an awesome year this year, up 288%. It's in our Palumbo Emerging Growth Strategy. We're big believers that they have a great business model where they're able to provide electricity anywhere without utilizing the power grid. So we think Bloom Energy is a great second derivative of current AI movement that we're seeing today.
And that's kind of a continuation story.
Correct.
Of what we saw in 2025. Ali, what about you? How do you play the AI story in 26? How does it look different and the same than this year?
Well, I'd say, Phil, and everyone's brought up some good points. I mean, we, for instance, really do like Google, Amazon, some of those other things. But I like the idea we're talking about the second or maybe the third derivative. A good example to us would be Schneider Electric. Global electricity demand is reaccelerating, driven by AI, electrification, data centers, and decarbonization. And this is no longer a cyclical story. You have sweeping policy mandates, rising utility capex, and real wide grid failures, which are forcing sustained infrastructure investment. Schneider is a direct beneficiary for the global electrification. Their products are instrumental in increasing energy efficiency. And also they spent the last few years transitioning from a cyclical hardware company to one that has reoccurring revenue. Another example to us would be ASML. It's a pure play within the AI build out. ASML makes the machines that make every advanced chip out there. And so as AI moves from video to multimedia models, compute intensity is increasing. And AI chips are critical for that production. You're seeing more orders and visibility, and essentially tight supply, rising demand will be the next leg higher.
Ali, I noticed you also mentioned healthcare as an interesting underperformer. Is that one that you want to get into? And when do we see the AI benefit there? That's been part of the excitement on the AI story, is drug development and healthcare changes.
True, and healthcare is one of those where, as you know, it's lagged the last 2 to 3 years for all sorts of things. Our focus there more is really earnings revision, easing policy risk, and you see a lot of M&A momentum. So it's more those aspects that are really encouraging as opposed to just really the AI angle of healthcare.
Yes, I mean, it gets to your point, Phil, about 493, the other 493, and when we'll start to see results. I guess the biggest question, which is kind of a circular question back to the semiconductors and the original AI, is just how quick this enterprise adoption will be and how big the payoff will be.
Yeah, that is the big question. And again, I do see 2026 and 2027. I do think the investments in AI and implementing AI into your business, without a doubt, makes a tremendous difference. There's tremendous value in utilizing the tool. Jensen Huang talked about this. When you give your employees access to AI tools, it could increase productivity by 2 to 3 times. I'm personally seeing it in my business, and I think many other businesses are starting to see it now, and it's for real, and it's only going to expand.
Why? What do you do in your business with it?
Everything from research component to marketing, which are the 2 components that save a lot of time for my employees. That's increase in the productivity and increase in revenue as a result of it.